Hey everybody, it is Greg Gossett from Gossett Trading and Mentoring Live, and today is Wednesday, November 13th, 2019, and we again find ourselves in the final trading hour of the day. I believe that the prices, as close as you can get them to the very end of the day, to the close of the market, are the most valid prices. During the day, we have the day traders, we have the algorithms, we have them battling it out. I consider it a lot of noise. I believe that the most valid prices are the prices that are as close to the end of the day, because that's when the large financial institutions, the market makers, take over the pricing and, in my opinion, move them to where they think is the most valid prices, and therefore those are the prices that I want to make my buying and selling decisions from. So anyway, thank you everybody for coming today. I do appreciate it as always. Hope everybody's having a good day, and I hope that you are, coming here, listening to the podcast, investing your time. I hope that you're learning something. I hope you're learning some good trading principles that are, helping you in how you view the markets and risk to reward and all that kind of stuff. So thank you very much for coming. Appreciate it as always. So today, a bit of a mixed market. The Dow Jones is up about 100 points. Largely due to Disney. Disney had a huge day up today. NASDAQ is slightly down. The S&P is slightly up. About a half hour ago, we had some news about possibly a snag in the trade deal with China, and then the market sold off pretty quickly, but it seems like it has rebounded. So anyway, have some interesting possible setups today that we'll get to. Evan, how you doing, Evan? Good afternoon to you too. Thank you so much for coming by. I appreciate it as always. If you have any questions today, please let me know, okay, Evan? So, all right. Well, listen, the plan for today, as always, is first of all, we're going to run the U.S. legal disclaimer. Then we're going to come back. We're going to take a look at all my current positions. We're going to talk about when I bought them, why I bought them, what methodology and what I was thinking when I bought them, and then how I'm going to manage them moving forward, either to the upside or to the downside. After that, we're going to do a few minutes on trader psychology. I think it's the most important part of trading, everybody. It's the skill that you really need to hone and develop to be a successful long-term trader. You can be the best technical analysis and chart reader in the world, but if your emotions get the best of you, if you cannot follow your plan, you're going to have problems. So I do like to touch on that each day, talk a little bit about that, and hopefully, you guys will internalize it by hearing it every day. But I think it's super, super important. After that, we're going to go down through my watch list. We're going to look at each stock in my watch list. We're going to take a look at the support levels, resistance levels. We're going to take a look at indicators such as RSI, MACD, moving averages, ATR channels, possible entries. And, the way that I view trading is if you want a stock to go up, you want to be in the company of other buyers and as many buyers as possible. So when I look at an indicator, I look at that as a potential group of buyers. So if I can see a confluence or a combination of indicators lining up, the way that I view that is I look at that as a combination, as many groups of buyers coming in. And again, if you want something to go up, it's important that you're in the company as many buyers as possible. So we'll go down through the list. We'll take a look. Ideally, we'll see if we can find a confluence or a combination of signals. And then if it looks good, we'll look at it a little closer. And then we have to analyze the risk to reward, because just because you have a good confluence of indicators doesn't mean that I can immediately take the trade. I have to analyze the risk to reward as well. I may have great indicators lining up, but in my opinion, it may be too high in the chart. It may be stretched too far and overbought. And in that case, I'm just going to have to let it go. So you have to have a good combination of indicators lining up, and then you also have to have a good risk to reward ratio too. So if I can find something that has good combination of indicators, and secondly, has a good risk to reward, if I find something good at the end of the day that qualifies, then I'll take the trade. And then after the market closes, if anybody has any questions whatsoever, please let me know. I'm happy to answer them or clarify any questions that you have. If you would like me to take a look at the stock, at a particular stock, at a symbol, I'm happy to do that, give you my humble opinion on that. And if you do see a trade that you think looks interesting, or a symbol that looks interesting before the market closes that you think would be helpful for the group, please go ahead and put it in the chat, maybe put an asterisk by it or something so I know that it's somewhat time sensitive. All right, so that is the plan. So hang tight and I'll be back in about 40 seconds after I run the US legal disclaimer. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. Hey Jackson, how you doing, my friend? Hope you're having a good morning there in Australia. Appreciate you coming by, and hope you're doing well. And if you have any questions today, bud, you just please let me know. Hey Toby Petty, how you doing? Hi Greg and everyone. Hello to you, Toby. Thank you for coming by. I appreciate it. Claudia Montoya, hi. How you doing, Claudia? Thanks for coming by. Good afternoon, Greg. I've been listening to you every day from work. I just wanted to tell you, I admire your discipline. My biggest struggle is my ego. I'm trying to find the way to deal with it. Well, thank you so much, Claudia, for coming by and for listening. And yeah, I was just talking about trading psychology and how important it is. And, discipline is part of trading psychology, and it's very important that you get it under control. And, there's a few ways to do it in my experience. One, if you can position size smaller, that will cause you to have better discipline because your emotions are going to be not as amplified as when you have large positions. And also, having an actual plan, a real plan that just, if this happens, I'm going to do that. If that happens, I'm going to do this, and then stick to it. And of course, if you have a smaller position size, it's going to be easier to stick to it. Other than that, a suggestion that I have is, tell your husband or your wife or your boyfriend or your girlfriend or your brother or your sister or your coworker, if you're finding that you have some issues with discipline, tell somebody about your trades, about your trade plan, and if they're able to or willing to, kind of monitor your trade. If you don't have anyone looking over your shoulder, you can do anything you want. But if you do have someone kind of monitoring you even a little bit, you are going to stick to the plan more because you're kind of accountable to someone. So just a suggestion, Claudia, but please let me know how that goes and if you're able to, do something that helps with that. But just keep in mind that if you have a plan and you have discipline and you follow the plan, doesn't mean you're going to make money this week or this month, but in the long run, if you follow that plan and it's a decent plan, you're probably going to do fine. So maybe try to take the long-term approach of trading a little bit more than the short-term. So I hope that helps, Claudia, and please keep me up to date and let me know if you're able to make any progress on that. Hi, Evan, how you doing? Good to see you. Do you have your eye on XLRE today, Greg? I certainly do. That is one of the ones that I want to talk about today when we go through the list. But yes, I definitely have my eye on that one. Looks like you do too, Evan, huh? All right. Well, I don't have a lot of positions here today. We were pretty. We just have a couple. So let's go through, take a look, see what we have. So I did buy Johnson & Johnson back here on the 5th of November. Prior to this, we closed outside the -1 ATR channel. We rallied back into the value zone. We had a couple days down. Then we had a V1 entry. Here is day one. Here is day two. Day two is the day I bought it, but day one has this low. Day two, the day I bought it, it washed out or went below this previous low and then closed above the previous day's close. That's my entry. If I'm wrong small. Close halfway of the washout bar. This is the washout bar. It moved up nicely for us 3 days, or after we bought it, 2 days in a row. We took some profits here. We took some profits here and here. It did move one ATR away from my entry. So when that happens, I start to trail my stop. And one of the, if it had gone up the next day and rejected that 200, that would have been a reason for me to have gotten out of the trade to the upside if it rejected something to the upside. But conversely, if it went down, then I'm waiting for a close below the previous day's low. Yesterday, it almost closed below the previous day's low. It did not, and unfortunately kept me in. But you never know what's going to happen. All you have is your plan, and you can follow it. Well, today, it does look like we may close below the previous day's low. And if it does, I will go ahead, just get out of this trade. It's still a profitable trade from the entry, but one of the reasons I really like to phase is because I did take some percentages of my shares out at these higher levels. So it's one of the reasons I really do like to phase out. So if today does close below the previous day's low, I'm going to go ahead and just get out. Evan says, yes, sir. Yeah, it's pretty striking setup, right, Evan? There's a bunch of reasons, and I'll go over it. But Claudia says, thank you for your advice. I'll let you know how I do. I feel obligated now to do better to give you a good update. Well, good, right? I mean, it's good that you have to kind of maybe be responsible to someone, and just kind of getting it out there sometimes will help that. But tell somebody about your trades. Give them a basic idea of what your plan is, either to the upside and the downside. And I promise you, if somebody's watching you and going, Claudia, you said that you were not going to get out of this unless this happened, then you have to explain yourself. Oh yeah, I blah blah blah, right? But it doesn't matter how good of a technical analyst or chart reader you are. If you can't follow the plan, it's kind of all for mute. So you do have to work on that, Claudia. Spend some time on that, work on that, figure out what's going to help you stick to the plan, and I promise you, it's going to help with your trading. All right, next trade. All right, so this is the famous overnight SPY trade. I know you guys hear me talk about this every day, but in case we have some new viewers today, I do want to go over it. This is a back study. It has nothing to do with technicals, levels, indicators, anything like that. This is just a long-term profitable back study done by Lizanne Saunders at Bespoke Invest. I believe she's the Chief Investment Officer at Charles Schwab. But with this approach, with this back test, there's two approaches. The first approach is you could buy the SPY each day at the open and sell it at the close each day. So buy in the morning, sell in the afternoon. Buy at the open, sell at the close, right? Every day. If you did this every day since 1993, for all your troubles, you would have returned a negative 13.9% on this approach. However, if you did the opposite, which is what I do, and you buy the SPY at the close and sell it the first thing the next morning, so buy at the close, sell them next morning, buy at the close, sell the next morning. If you did this approach, from 1993, you'd have actually returned a positive 634.2%. So huge difference between buying in the morning, selling in the afternoon, or buying at the close, selling the next morning. 634.2%. So what this means, and I say this every day, but I still find it fascinating, is that all the gains in the S&P 500 since 1993 have not come intraday. They've come from people bidding it up in the after hours. They've come from people bidding it up in the pre-market. And that's where the gains from 1993 have been. And here's the chart. Here's the blue. The blue line is the buy in the afternoon. Yes, buy in the afternoon, sell in the morning. The orange chart is the buy in the morning, sell in the afternoon. Not even close. This shows you what a good long-term approach with an edge can do over time if you can stick with it. Right? There's ups and downs in between. That's normal for everybody in every trading approach, no matter how good the edge is. You're always going to have ups and downs. Position sizing is very important. Also, if you would have entered here with huge position size, you'd have had 2 years down. You would have lost a lot of money, and you said, this is the worst approach ever. But if you'd have been conservative, yes, this would not have been fun, but if you stuck with it, it definitely would have paid off. And the other thing I want to mention too, the orange line, You know, this shows the gain from buying in the morning and selling in the afternoon. What this really is showing is that all the movement comes in after hours or pre-market. So actually all the edge in trading comes from the after hour and pre-market. It does not come during the day. And a lot of day traders, you know, are mentioned, I don't want to hold overnight. It's very scary. It's a big risk. But in reality, if you look at the numbers, it's completely opposite. The edge and the gains come in the after hours, not the risk. I mean, sometimes they do, but I mean, this is clear, right? It's clear that the holding overnight gives you the edge and not here. And if you are a day trader, it's difficult to make money in the daytime because you don't have the movement. The movement comes from after hours. So with all of that said, and build up, had a losing trade overnight. I did buy it yesterday at 309 even in the right at the close, and this morning sold it for 307.94. So I lost $1.26 per share overnight, and then it reversed on me immediately, right? So I almost sold the low, but that's how it goes. You know, when I take these trades, I don't get too excited one way or the other. I'm just playing it for the long term. You know, in May, using this approach, I lost 80% of my trades, 80% during the month of May. But overall, since I've been using it, it's been hugely successful and profitable. I mean, during this little run in October and beginning in November, we just really kicked butt. I mean, we had a great month, made an all-time high using this approach. I don't know, it was back here maybe, but the last few days have been, you know, it's starting to chop, just like a chart. Sometimes you get it up and then you get chops and then you go down. It's the same with your equity curve. And my equity curve on this has gone up, 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 up. And now we've had some wins and some losses and some wins and some losses. But, you know, I don't get excited about it. I just know it's normal part of trading. So I like this approach. It's easy, it's simple, and it has great back-tested statistics to it. So anyway, today was a loss, and that's okay. I'm going to buy it again at the end of the day, and we'll sell it first thing tomorrow morning. Hey, Steve Burns, good to see you, sir. Thank you so much for coming by. Steve says, hey Greg, your third ATR channel has been a level I've added to my charts. Thank you for sharing this. Oh, Steve, thank you. You know, I was busy teaching last night, and I'd had about 5 hours of teaching stocks last night, so I couldn't really bear any more stock talk. So I went to bed. But thank you. I'm going to watch that tonight. And for those of you who don't know, Steve Burns has a weekly video newsletter that he brings out 3 times a week, where he analyzes the markets. Very, very good. It's at newtraderu.com, and it's under the video weekly video newsletter. I've subscribed to this, I believe, ever since he's had it available, and I look forward to it, and I watch it every single time except for last night. But I am going to watch this. But it's very helpful. You know, there's a lot of things that I pick up from there that I like to share here as well. But thank you, Steve. That's an honor for you to talk about the third ATR channel and add that as one of your indicators. That's fantastic. So thank you very much. And thank you, Steve, for coming by. It's always an honor. It's always a privilege to have you here. I'm always excited to have you here. I know everyone else is too. Mount Doji, hey buddy, what's going on? Good to see you, sir. Hope you're doing well. Let me know about your trades. Kurt, what's going on? Hey, Greg and all. Hope you're doing well, Kurt. How are things going? How's the trading going? Any positions? Let me know. I'm always interested to follow my students and my former students' trades, see how they're doing. Mount Doji says, I am eyeing V1 on stay and the V2 on Yeti. Well, I'm just interested to look at these symbols. Stay, extend America. Yeah, well, listen, I mean, we have a nice V1 here, higher low V1, over the 50 RSI, over the moving averages. Do we know it's going to go up? I don't know, but I do know that if if I took this trade here today, it looks good too. If we had a close below halfway of this here, I would get out. That would be my stop. And to the upside, that hundreds looming pretty good up there, but it does give a good risk to reward. But yeah, I like it. I like the sidewards movement. I like the V1. I like the over the 50. I like over the moving average. So yeah, that looks good, Mount Doji. And then Yeti. What is Yeti? I'm looking forward to this. Actually, this one, Mount Doji, personally and honestly, we closed below the 1 ATR channel. I would like to see this rally into the value zone a little bit more, then have a couple days down, and then have a V1, V2, higher low V1, V2. Technically this is a higher low. Well, actually, technically the V1 was yesterday, not today. But yeah, just my humble opinion. Doesn't mean it's right, but I would imagine that once we get up into here, we're going to get some kind of selling resistance because the people that bought it down here are going to be looked to selling it. But it looks like it might close over the 50 RSI, which is good. But yeah, just my gut feeling here is I'd like to, now that we're in the value zone, I'd like to see it go up another day, maybe have a couple days down, and then have a V1 or a V2. So just my humble opinion. Don't know if it's right or not, but that's what strikes me. Steve says, holy moly, the Disney chart. Disney Plus access wasn't Disney Plus success wasn't priced in. Yeah, if you look at Disney, boy, look at this, guys. I mean, unbelievable. So the Disney Plus must be a huge success. Look at this, 7%, unbelievable. Looks like we may close above the 6th ATR channel. Anytime you get up to the 6th ATR channel, you are in very rarefied air. Difficult to get above the 6th ATR channel. So this is huge, 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 but too high for me to buy right there. Hey, Jesse, what's going on, my friend? Good to see you, sir. Thank you for coming by. And yeah, I hope that made sense in my email that I told you. Remember, close below the previous day's low on that trailing stop, not the close. Marco, hey, how you doing, Marco? Good to see you, sir. Thank you for coming by. If there's anything I can help you with, please let me know. Mount Doji. Predicate hearing your thoughts, or as always. Oh, appreciate hearing your thoughts as always. You're welcome, Mount Doji. Just my humble opinion on those, but I like that first one better, the stay. And actually, I want to look real quick at Travelers. This is Jesse's trade here. So if I remember correctly, I think he bought here when we went under 30, over 30, and it did start to move nicely. And I think Jesse got out yesterday because it closed below the previous day's close. And I had mentioned to him, it's not the trailing stop is not below the previous day's close. It's below the previous day's low. So anyway, it happens, right? We all make mistakes and get confused and so forth. But so he did get out, and if he would have used the close below the previous day's low, he'd still be in, right? And if you were still in, Jesse, and of course if we started to get up here to the 50 RSI, reject the 50 RSI, that would also be a place to maybe want to get out of your position as well. That makes sense, Jess? All right. So let me see what's happening here. Okay. So listen, guys, this is the time of the podcast where I do like to talk about trading psychology, some trading tips, some trading words of wisdom, and there's some really good Twitter channels out there that talk about these things. And one of the very best is Thomas Paine at Trader T Paine on Twitter. If you guys haven't subscribed to him, I would really suggest that you do. He puts out some just great words of wisdom on trading and trading psychology every day. I'm always impressed with what he comes up with. And so if, go to his channel, subscribe, and read his things every day, read his post every day and internalize. But I thought this was relevant for us. Top reasons for failure, right? There's so many ways you can fail in trading, but let's go through them. Poor selection. Anybody guilty of that? Maybe don't put in the time. Don't analyze the risk to rewards. Don't wait for the confluence of signals. Have FOMO, get in because of emotions, not because of setup. Poor selection of your trade entries, certainly a big issue. Don't cut losses. Well, I think a lot of people are guilty of this. People do not like to be wrong. Their ego wants to protect them and say, okay, I'm in this, but it's a loss, but I think I'm right because of this, that, and the other. But the market disagrees with you, and the longer you hold on to a loss, the larger that loss gets, the more difficult it is to let go. Because if you buy something, it goes down, goes down, goes down. If you liked it at that higher price, well, I guess you got to love it at that lower price, although you shouldn't. But still, you're like, man, I can't sell it down here. Now I wish I would have sold it where I was supposed to, but now I can't sell it down here. It's ridiculously low. And as you guys know, it probably continues to go. So, if you take anything away from this podcast and what I'm teaching, please cut your losses short. That first loss is the easiest one. It might sting for a second, but you're going to forget about it. But if you have you hold on to something that's a huge loss and it keeps going down and down and down, and you don't get out. I mean, it's almost impossible sometimes to get out when it goes down so far. And that's where you'll do huge damage to your account. Huge damage. So please cut your losses. Don't protect gains. Okay. So, if it starts going up your way, you're just like, hey, it's going my way. I'm just going to stick with it, which, okay, it's kind of, I can understand that way of thinking. I would much rather have you think that than not protecting to the losses to the downside. But, you have to protect the gains. You have to use some kind of trailing stop, right? We were just talking with Jesse about close below previous day's low once it starts getting extended from your entry, or rejections to the upside might be. But, you have to play offense and defense. Defense is cutting your losses. Playing offense is, for me, scaling out, and then also playing defense when you have a gain to protect it. So poor selection, not cutting your losses, not protecting your gains, adding to losers. Anyone ever do this? I'm sure no one has ever done this. Of course you have. Like, it's human nature. But the old saying, losers average losers. I've done it so many times. Right? Sometimes it's worked out, sometimes it hasn't worked out, but I never feel good when I do it because I know I'm doing the wrong thing. So, don't add to losers. You're wrong. You already know you're wrong. So don't throw good money after bad. No strategy. Okay, well, of course you need a strategy, right? It doesn't have to be the best strategy in the world, honestly. It just has to be a decent, good principled strategy that you have an actual real plan. Like, if it does this, I'm going to do that. If it does that, I'm going to do this. Just as long as you have a plan. But most people, they like to get into stuff, but then they don't really have a plan. Where am I going to get out to the upside? Where am I going to get out to the downside? You really need a strategy, and it does not have to be, from Warren Buffett, right? Or Paul Tudor Jones. It just comes, the strategy should be, cut your losses quickly and be patient with your winners as long as it's moving your way. There's your strategy. No drive. Well, you have to have a drive. You have to be committed to this, right? If you don't have any drive, most traders that I know have a drive. I just think the drive is misplaced sometimes about always thinking about profit instead of, first and foremost, we want to think about risk control. But yes, you have to have a drive. No patience. Patience is huge in trading, everybody. Of course, this is true. It's the one advantage that we have, us small retail traders have over the large institutions. Those guys have to buy and sell all the time. They have order flow. We can sit back. Warren Buffett says there's no 3 strikes rule in the market. So you can wait, be patient, wait for that perfect setup to come. Patience, not having patience is one of the biggest advantages we have, and it's the most seldom used by retail traders. Poor attitude. I mean, look, attitude drives everything, right? If you're going through a drawdown, you're going through a rough time, multiple losses over and over. It happens. It happens to the best of us, but you have to keep your attitude positive. Try to look at everything half glass half full. If you lost, go, okay, I lost, but at least I didn't lose this much, right? Or I lost, but I took a couple phase outs. So, it's important to have a positive attitude. So when something something goes against you or wrong, try to stay positive about it. Look at the glass half full. Take advice from bozos. All right. Yeah. I mean, be very careful if someone recommends the stock to you. Oh yeah, buy XYZ stock. Okay, when should I get out if I'm wrong? When should I get out if I'm right? They won't know. I promise you. So no matter what you get in, have yourself a real plan, right? Have a real plan, have exits, have entries, know what you're going to do. Misguided expectations, huge. I think a lot of people get into trading. They feel like, they're going to make $1 million in the first year. Not going to happen, right? I mean, my goal every year is somewhere between 12 and 18%. That's my goal. Do I hit it every year? No, I don't. Do I hit it majority of time? Yes, I do, right? But those are not misguided expectations. Those are decent, achievable expectations. But am I thinking I'm going to make 30, 40%? No, because if I'm going to to make the larger gains that you're going to make, those come along with larger drawdowns, and I don't like drawdowns. So have realistic expectations. Don't know risk to reward expectancy. Okay, well, I talk about risk to reward all the time. It's very important that you know your risk to reward. You don't know exactly where it's going to go to the downside. You don't know exactly where it's going to find resistance at the upside. That's an unknown, but you have to make an educated guess based upon your technicals. Doesn't mean they're going to hold to the downside. Doesn't mean they're not going to go higher to the upside, but you have to use an educated guess based upon your technicals. So yes, make sure you have a good risk to reward. Make sure you have more reward than the upside. Scared of risk. Okay, this is a big one. Most people in trading, from what I have found, they're not scared of risk. As a matter of fact, they don't even think about it. They're always thinking about the upside. But for some people, including myself, this is probably my weakest point of my trading is the scared of risk. I'm pretty good with all this other stuff, but this bottom one here is, that's where I need to work, because I do get kind of scared of risk because I always concentrate on, capital preservation first. So this is probably something I've got to work on even more. I mean, I'm pretty good at it for sure. But if I did have a weak spot in my trading, it's that sometimes I am a little afraid of risk, and maybe I'm more conservative sometimes than I should be. So maybe this is one that I need to work on. But if you're like this too, remember that in order to make money, you do have to put risk out there as well, right? And Thomas says, damn, Twitter only lets me use 280 characters. All right, so there's a lot more, but poor selection, top reasons for failure: poor selection, they don't cut losses, they don't protect gains, they add to losers, they have no strategy, they have no drive, they have no patience, poor attitude, they take advice from bozos, they have misguided expectations, they don't know the risk to reward, and they're scared of risk. I mean, if you knew someone that had all of these issues, do you think they'd be a good trader? Probably not, right? So anyway, Thomas, thank you. It's kind of fun to riff on all of that, but excellent post. And if you guys haven't subscribed, Thomas Payne at Trader T Payne on Twitter. But thanks, and hope that's helpful for everybody in the podcast. Okay. Steve Burns says, imagine being long in Etsy and not cutting your losses. Yeah, 100%. 100%. I was going to mention the same thing on Amazon too, Steve, when I get to it. Frank, hello, Greg. And all, I'm out of APPS and took a position in McDonald's at 194.24 today. Perfect. Oh, actually, I sold a put on McDonald's today. I forgot to show you that. Jesse, I was in TRV since October 31st, climbed nicely, excited. exited on incorrect signal. No big deal. Skinned a decent profit from the trade. Considered getting him back in this morning, but passed. Oh, good. I agree, Jess. Claudia, do you think the 10 EMA is a good trailing stop intraday? So far I only day trade. Yeah, I mean the 10 EMA is a good kind of standard basic trailing stop, Claudia. Marty Schwartz calls it red light, green light. He likes to be in over the 10 EMA and he likes to be out under the 10 EMA. So yeah, that's certainly one way to go, right? Are there more sophisticated ways? Sure. There's more sophisticated ways for sure, but it doesn't mean that the 10 EMA isn't good enough. Dr. Long, have miscutting losers many times. Happens to everyone. Absolutely. Jesse says Steve Burns or short Disney. I'm going to short Disney? I wouldn't short Disney. Dr. Long says too greedy, getting out also. True. Bing He, hey buddy, how you doing? Frank says my stop on McDonald's is just above my cost basis. Is that what you mean, Frank? My stop? Dr. Long says XLU breaking out. Yep, we're going to go over XLU. Steve Burns, oh yeah, Disney shorts are all dead. Oh, that's what you're talking about. Okay. Yeah, that's a short killer. Short killer, Disney. Same with Apple. All right, well, let's get to it. I taught a lesson last night with one of my clients, and we went through a chart they were interested in, and they asked me whether I would buy it here. This is Dollar Tree. And I said, I'd like to see it bounce off the 30, wash out the 100, wash out the third ATR channel. Then I would be interested. And if it had a V1, even better. Well, look what we have here, right? We came down here. We bounced off the 30 RSI today. We bounced right off of it. We washed out the third ATR channel. We washed out the 100-day moving average. And we also have a beautiful V1 entry. So yeah, I am going to buy this today. At the end of the day, 36 RSI still gives a pretty good risk to reward. My stop's going to be a half, because it happened with the V1, my stop is going to be a halfway of the washout bar. So approximately right here. So I am going to buy this at the end of the day. If it stays above the 100-day moving average and it stays above this, the V1 entry, but this is a good risk to reward. Do I know it's going to go up? No, I have no idea, right? But from a technical standpoint, from an RSI standpoint, from a rejection of the third ATR channel, the 100-day moving average, the V1, the bounce off the 30, it's told me today that the market has tried to go down here. There were no more sellers. Tomorrow it could go down 100%, but it gives me a good risk to reward. I mean, my risk is probably from here to here on the best case, and my best case to the upside is maybe up to here. So anyway, I am going to buy a Dollar Tree here as long as it confirms the V1 and hangs out over there. When I say hang out over there, I mean it's above the third ATR channel. Apple is another short killer. This is an unbelievable run, like once in a decade kind of run. It would have been fun to be in this trade, but the way that I trade, my filters that I use, it was just too high, right? And unfortunately, I wasn't able to get in this, but we're very high here. We're going higher and higher and higher. Well, the volume did pick up today a little bit. So anyway, I can't get involved in Apple. I have to wait for a pullback into the value. That's really all I can do at this point. Adobe, finding resistance at the third ATR channel, just too high. I need to pull back into value, look for a sideways movement, V1, V2 entry. I would like if we could get into value with this and have a V1, V2 right around the 200-day. That would be like cherry on top. Advanced Micro Devices just goes up every day. It's unbelievable. It's unbelievable. I can't buy here. It's too high. Don't want to short here. It's too strong. So we'll pull back into value. Look for the dip. The old saying, buy the dip, right? Amazon. Steve just mentioned not adhering to your stop in Etsy. And that's true. And, I took Amazon right here when we closed above the 200-day. I got out the very next day for a small loss when we closed under the 200. Imagine if I would have been stubborn and went, I'll give it another day. I'll give it another day. Oh, it's in the value zone. I'll give it another day. Same, 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 same. Right? I mean, you would have you would have just had a whooping, right? Looking back, this loss from here to here, not too bad, right? So anyway, nothing on Amazon here at the moment. I do want to point out though that it looks like, let's see, the 5 is 1774.77. The 50 is 1775.26. So it looks like the 5 is crossing under the 50 today. So if the 5 now can cross back over the 50, that's a good back-tested approach, crossover approach to trading Amazon. So in the coming days or weeks, if we get a close back, the 5 closing back over the 50, I will go ahead and enter Amazon because that's a good back-tested approach trading Amazon. So first thing that needed to happen was this to cross under. Now any cross back over is going to be good. Boeing getting rejected at that 200-day, 3 days in a row. Nothing there. Need to pull back to value. Caterpillar was very extended. It is starting to move its way back into the value zone, so I'll look for some kind of V1, V2 right here. The Dow, it looks like we're back over 70 on the RSI, which is good. Still struggling with this third ATR channel. This is what Steve was talking about, the third ATR channel. 90% of prices fail here, so does it mean I'm going to go ahead and just short this? No, it doesn't. I need some kind of pullback before I can get interested. Here's Disney. This is the short killer. Unbelievable, up 7% today. Can you imagine if you were short this stock and you didn't immediately get out, you got stubborn? Ugh. Yeah, no fun, no fun. So look at this volume. So nothing I can do here. Wait for some kind of pullback. Etsy, this is what Steve was talking about. You know, if you did not adhere to your stop, what would have happened? You know, if you love it here, you got to really love it here. If you love it here, you really got to love it even lower. What are you going to do? So hard to get out of a stock when it's doing this, like extremely hard. But it could keep going down for weeks. It's a 2366 RSI. If it closed above the 30, that would be my first reason to possibly get in this stock to see if it's strong enough to close back above the 30. But so far, it is not. Ford Motor Company, big down day. You can see, here's another example. If you would have bought over the 200-day, getting out with the close under, you would have had a little small loss. Wouldn't have been fun. But imagine if you would have kept it. You'd have this fun right here. So nothing on Ford. How are we doing on time? Facebook did have that nice V2. I didn't have any real sidewards movement on this. Well, I guess there was a couple days, but when it did trigger at the end of the day, it was much too high, so I couldn't buy it here. You know, this is a big up bar. We'll see if it can hold support at the 50-day, but nothing there. Five Below, just continuing to go down. I would be interested in looking at Five Below if we could get to a 30 RSI. Ideally a 30 RSI. At the same time, we have a confluence with the third ATR channel or a 200-day. Market Vector, I almost bought this yesterday. I almost bought it, but the reason I didn't buy it was because this is a lower low. This is lower than over here. This is a lower low V1. I do like that we had these nice couple days sideways and this beautiful V1 and bullish engulfing bar, but anyway, didn't buy it up today. But now that it's in the value zone, I would look for a day or two pullback and then look for a higher low V1 or V2. Google down today. It is, did right up here at the third ATR channels where it kind of got stuck, looking for a pullback into value here. Goldman Sachs, again, another reason not to buy at these high levels because usually it comes back. It is in the value zone. Well, it was in the value zone, so just waiting for a dip. Home Depot does have a nice higher low V1 here with a close over 50, close over the moving averages. The only thing is that on higher lows, I like it to go into the value zone and then have a couple down days and then on that third day have the buy day. That's what Linda Rashi calls the buy day, where you have a move up, have 2 days down. That third day is when she's looking to buy. So I mean, this is okay. It's decent. We do have earnings coming up, but I mean, it is a spectacular V1. It's just that I would rather have a couple days down before I bought it. So I'm going to pass on Home Depot. IBB, it's just too high. Intel is just too high. I need to pull back into value. The Russell, very extended over here, waiting for a pullback to value. Johnson & Johnson, that's what I have. It does look like it's going to close below yesterday's low, so I will go ahead and get out of this today at the end of the day if it closes there. Coca-Cola had a nice bounce. I was waiting for a bounce, but it didn't quite get low enough for me, so nothing on Coke. Lockheed Martin's just been marching straight up. Again, we're now above the 1 ATR channel. I need to pull back into value. MasterCard, moving up pretty nice, but very range bound and very V bottomy. I don't like that. McDonald's, I think after the market I'll show you guys because I'm running low on time, but I did sell a put on McDonald's today down to 180. It's at 194. So, but MACD positive. Looks like we're finally going to be able to close over this 10-day moving average, which it has not done for a long time. So that's a good sign. Altria, nothing there. Merck, kind of wish I would have taken this V2 now. The reason I didn't take it was because I had this whole confluence of moving averages above, but it seems to be working out nicely. Microsoft, just too high, waiting for a pullback. Netflix, big down today. We did have a pretty good trade here. We scaled out up here. I got out here, and next couple days it rallied again. I was like, dang, but obviously now I'm glad I was out and took the profits. So this probably has a lot to do with Disney. Nike. Oh, remember yesterday I said I was going to short Nike down here, but not for real. Good thing it wasn't for real, because it was a huge day down, and my stop would have been halfway of this washout bar, and if it closes above here, I would have to get out. But I did not take this trade, but I did think it looked like a good setup to the downside, but I was way wrong, and glad I didn't take that trade. Philip Morris, just too high, waiting for a pullback. PayPal, not doing much. I don't know. I think the 520 EMA crossover on PayPal is a good back-tested approach. I'm not sure, but it doesn't look like it's going to happen. But in the future, if it does happen, I would consider taking that. The Qs below the 70 RSI, below the third ATR channel, running out of momentum a little bit. You can see the momentum bars are getting smaller and smaller and smaller and smaller. Doesn't mean I'm going to short it here, but if I was long, I would be concerned. Waiting for a pullback into value. Silver, having a pretty nice day there. No signals. S&P, we had the overnight loss, which is unfortunate, but going to have to buy this again today at the end of the market. Bonds, gapped up pretty nicely. Reverse now, so nothing quite on bonds yet. Tesla, down $4 today. Too high, waiting for a pullback. Twitter just continues its sideways move. UNH, looking for a pullback into value. Oil's just been above, below the 200-day moving average. The VIX, if this closes over 30 today, I will buy the VIX. So, interesting now, on some of these new high days, we've made new highs, but we haven't made new lows on the VIX here, which is a bit of a divergence with the market going higher, but the VIX not making new lows. So, think about that as you will. But of course, when I see divergences, I think maybe we're going the other way. But if we do close above 30 RSI today, I will go ahead and take a position in VIX. Verizon, V1, but it's a lower V1, rejected the 1 ATR channel, so nothing on Verizon. Walmart, big day today. Look at that, having earnings coming up, too high for me to buy here. Energy Select, nicely moving back into the value zone, right? Rejected the third ATR channel, moving into the value zone. Now we just need a couple days sideways movement. Look for a V1, V2. Financials were way extended, waiting for a pullback. All right, here's real estate. So look at this, guys. Yesterday we went under 30 RSI. Today we went over 30 RSI, right? Just that by itself is good. Under 30, over 30. We also went under the third ATR channel, over the third ATR channel. That makes it better. And we have a pretty sweet V2. Day 1, day 2, day 3. Day 2 washes out day 1. Looks like day 3 is going to close above day 1. So I am definitely going to take this. My stop is going to be halfway of the washout bar. So probably right about here, giving me, potentially a small loss from a technical level and giving me a good upward to the upside if I'm right. So I do like this. Again, under 30 yesterday. Looks like we're going to close above 30 today. Under the third ATR channel, close over the third ATR channel, and throw a V2 on top of there. And if we go back, do we have any support back at that level? Not really. But that's plenty enough. I don't know if I'm going to be right on this, but this is an excellent setup. And, good to be patient. Remember I was talking about being patient earlier? Well, good thing to be patient, right? And wait for a signal. There's basically no signal this whole way. This is your first signal. So I'm definitely going to take that. XLU bounced really high here today. I don't think I would buy this now. I don't quite like the risk to reward on this anymore. I did buy here and had to take a small loss here. If I would have waited, it would have worked out this time. But healthcare, nothing. So let's take a look real quick. And sorry, I'll get you your comments and everything. I just want to see how we're doing on time. So it looks to me like I am going to buy dollar. Looks to me like I very likely will have to get out of Johnson & Johnson. VIX, oh, it's over 30 now. So I will be buying VIX and real estate. So again, I am going to be buying full position on Dollar Tree. I'm going to be buying a half position on the VIX if it closes above 30. And I will be buying a full position in real estate and very likely getting out of Johnson & Johnson, although now it's right on the bubble. So let's take a look real quick. All right, we got 8 minutes. Jackson says, yeah, I was in Amazon. Cut that baby fast. No regrets there. Makes you feel good, right, Jackson? Not that you lost money, but it reinforces why it's good to take quick losses. Frank says, Dean Foods shows you what can happen to a stock. DF, let's see. DF ODQ. I don't have that one, Frank, on my charts. I can't view that. Sorry. Did it go up or down? Jackson says, have a rule for myself to see at least a couple of days down before I take V1, V2, unless there's some extremely special confluence, possibly, but generally no for me. Yeah, I learned that from Linda Raschke. Linda Raschke is one of the most famous traders out there, probably the most well-known female trader. And I've attended some of her classes, and she likes 2 days down before she buys, because she feels like the first day it goes down, for whatever reason, it goes down. Then there's news about it. People read about it. It's on the television. Next day, people sell again because of the first day's activity. And then that third day is the day that she likes to buy after it's kind of probably run out. So she the third day is her buy day. So when it comes to higher low V1s, it goes up into the value zone, comes down a couple days, and then has a V1, V2. And so when Linda Raschke speaks, I think we should all listen. Okay. So I'm going to have to, this is always the toughest part of trading, guys. And I trade several accounts, so I have to do this in multiple accounts. All right, well, looks like we're back above the low of Johnson & Johnson. So looks like I will be keeping that. What do we have? 4 minutes. All right, I'm not going to get too extreme about the time because I don't I really don't have the luxury of waiting. Okay, I'm just going to buy some of these and get them out of the way. All right, this is Dollar Tree. I'm buying Dollar Tree. $108.43. It's a great setup. I don't know if it's going to be a winner or not, but from a setup standpoint, it's good. Close below here will be my exit. Close below the halfway of the washout bar. So let me just make sure I have, okay, I have Dollar Tree there, and I have Dollar Tree there. Okay, good. I've got Dollar Tree. VIX, I'm going to buy VIX. And real estate. Okay, real estate, I got it 38 even. How about that? All right. XLRE there and XLRE there. Okay, good. Johnson & Johnson looks like it's going to be a holder. Looks like it is going to close above yesterday's low, so I will hold that. And the VIX looks like it's going to hold. Okay. Couple minutes. All right. I'm going to go ahead and buy that. $18.46. And that was a half position because it's under the 200-day moving average. Okay. And then I'll be buying the SPY at the end of the day. So Johnson & Johnson does look like it's going to close above the previous day's low, so I'm going to keep it. SPY, of course, going to buy that at the end of the day. VIX, I did buy it here at 18.46 with the close over the 30. DLTR, V1, bounce at the 30, close over the 100, close over the 30 TR channel, all good. Bought that at 108.43. And XLRE, under 30, over 30, V2, under the 30 TR channel, all good. My stop on this one will be a halfway of the washout bar, which is right here. Okay. And I bought the SPY at 309.10. So that was our loss there for today. 309.10 for tomorrow. All right, well, we finally have some positions. So just quick run through again. Bought Johnson & Johnson here, this higher low V2. It did move up. We took some profits. Now it's had a few down days. I wasn't going to get out of it if it closed below yesterday's low, but it stayed above. So I will be keeping this again, and we'll see. SPY, I re-entered SPY today with the buy in the afternoon, or buy at the close, sell in the morning, right here at 309.10. VIX, I entered VIX because we closed below 30, back over 30. My stop will be a close under the 30 RSI. So I got that at 1846. Dollar Tree, beautiful V1, bounced off the 30, rejected the third ATR channel, rejected the 100-day and the V1. It's a V1, so close below halfway will be my stop. So yeah, I mean, I think those are all decent setups. I don't know if they're going to go up or not. I wish they would. If I had my druthers, I would like them to go up, but we never have any control over that. We have control over when we enter and how many shares we entered, and that's all we have control over, right? And giving ourselves and analyzing a good risk to reward. So anyway, we will see what tomorrow brings. Like Mark Douglas says, you pull that slot machine, you know something's going to happen. We do know something's going to happen tomorrow. We just don't know what. But we have a plan, right? I'm going to phase out to the upside if I'm right. If I'm wrong, we get a close below. Get out, that's too bad, and wait for the next good setup, and hopefully that one will do better. So we don't know. We're just going to have to see. All right. Hey, listen, before I get to the comments and questions, just quickly want to put in my daily plug, let everybody know that I do offer private one-on-one coaching, teaching, and mentoring lessons in the evening time. I do like to teach. I've had really good success with my students. I do have a course. It's 10 hours, but it's always more than 10 because it's 5 2-hour sessions, but usually they go 2.5 hours, sometimes 3 hours. You know, I don't want to get off Skype with my students until I really feel confident that they understood what I learned that day, what I taught that day. But formally, it's 5 2-hour sessions, right? But it's longer than that. But they're one-on-one, they're intensive. I teach, I ask a lot of questions. You know, you have to break down the charts for me. You have to teach me what I just taught you. It's intensive, but it's good and it makes you think. And I think if you take the class, you will definitely have a deeper understanding about how I trade and everything I've learned as a full-time trader over the last 24 years. So I definitely think it's worth it. I think it's an investment. It's $1,000, but listen, I just can't imagine that you will not either make that back or not lose $1,000 in your trading account based upon what I taught you. Either way, it's going to be worth the money. I'm almost positive of that. So, you know, if you're interested, let me know. Generally, you know, if I get interest from a new client, first of all, I like to have a Skype call, quick Skype call, so I can kind of interview you a little bit. I want to know about you, your trading, what your issues are, what your goals are, and then, you know, you can ask me about me and so forth, and we can see if it's a good fit. The Skype call is totally free and there's no obligation, I promise you. So if you're interested, my email's in the description of this video, and also you can send me a message on Twitter. So anyway, you've been thinking about it, you know, go ahead and do it. And then if you like this channel and you haven't subscribed, I would appreciate if you would subscribe, or if you would share it with your friends or tell your trading friends about it. That would be nice. And at the very least, if you like today's content, if you find it helpful, you know, if you're getting some value out of that, I just in return, I would appreciate if you could hit the thumbs up button. That helps get the channel and grows the channel and gets out to more people, because there's a lot of people out there that need help with trading. I can promise you that. I I work with them every day. So anyway, thanks for that. Thanks for holding through my plug. And Jesse said symbol is DF. Well, that's a lot shorter. DF. Oh my gosh, do I even want to see this? Oh, let's look at the monthly. Oh my goodness. Guys, this is a $22 stock. Now it's an 80-cent stock. Probably would have been a fairly good idea to have a stop on this. Can you imagine somebody go, it's not going to go any lower than this, not going to go any lower than this. Look, I'm not making fun of this, and I feel bad for the people that have been in this because I went through this exact same thing when I was in my 20s, had a lot of money, had no clue about trading, and lucky me, I didn't just get one of them, but I got two of them, WorldCom and Enron, right? Back in the early 2000s. So I am not making fun of anybody. I feel bad for anybody that's gone through this. I really do, because I've been through it. But the takeaway is you never know if something's going to go to zero. So you always have to have some kind of rule or stop in place, right? We talked earlier about playing offense and defense. I mean, even if you would have used something just as simple as I'm staying out of this thing under the 200-day moving average. Okay, you're in here, lost the 200-day. I mean, just the simple 200-day moving average, guys. If you had a rule, I'm not getting in this thing unless it is above the 200-day, you would have missed out on all this. You would have gotten out at $9 just by using the 200-day as your stop method. So thanks for pointing that out, Frank, because this is a good teaching moment, and it's good for people to learn. They can see what can happen. Yeah, Dean is down over 80%. Bing He says, wanted to buy DGAZ on 6 November, but held back as the charts had a lot of gaps. Today target hit 20%. Feel lousy now. Okay, let's take a look. On the 6th of November. Well, if I was looking at this, it didn't quite close under 30 RSI. And to be honest with you, I really don't see any signal here that I would have bought Bing He. If this was 30.65, I don't know earlier in the day if it actually went under 30 and the back over 30. I can't measure in the back. I can with the current bar. But I really honestly don't see an entry signal here. There were a lot of gaps, but gaps get filled. So gaps to the downside make me feel more comfortable that it's going to go up. I mean, here we have this gap now to the upside, makes me think it's going to come back down. But we are into the value zone now, so maybe look for a higher low V1 or V2. But I know it's unfortunate Bing He when you're wondering about a trade and then you don't get in it and then it goes up. Well, this is 3 times leverage too, so keep that in mind. That's why it's up so much. But I don't see a trade here. Be honest with you, Bing He. Jackson says, I like how J&J dances around the last previous day's low. I know. I was thinking the same thing, Jackson. But, it goes to show you that previous day's low does hold some significance, right? Yesterday, we went below the previous and closed above. Today, we went below the previous and closed above. So we'll see. If it goes crashing down tomorrow, we wish one of these would have failed, right? But anyway, that's the plan. That is my plan. Jackson says, Greg, ultimate profit target on oh, okay. If this were a lesson right now, I wouldn't be giving you the answer, right, Jackson? You know this. I'd be making you give me the answer. So, okay, let's look at VIX. Initial profit target is going to be the 50 RSI. So let's just do this for real. Yeah, if this were a lesson, I'd have Jackson would be telling me. I wouldn't just give him the answer. He needs to. My students need to work for the answers. They need to think about it. All right, there is my 50 RSI. So that is going to be my initial profit target. And as far as my ultimate profit target, based upon all of this, 50 days appears too high. I would probably use the third ATR channel. So that is my setup, my above profit targets. Initial profit target, the 50 RSI. Ultimate profit target, the downward sloping third ATR channel. And then DLTR, let's take a look at that. Initial profit target, 50 RSI. Now, for my ultimate profit target on this, I don't think I would use the 50. I mean, if it closes above the 50 RSI and then rejects the 50, yes, I would get out. But what Jackson and I are talking about is my formula for phasing out. And what makes a lot of sense to me would be, you see how we have this previous high and we have this downward sloping 1 ATR channel. Let's just call it the previous high, or you could use the downward sloping for your ultimate profit target. Let's just use that one there. It won't make that much of a difference. So on DLTR, there we go. Initials the 50. Ultimate is going to have to be something above the 50 that makes sense from a technical standpoint. And then of course I would measure from there to there to do my numbers, right? And I would measure. Sorry, you guys may not know what this is, but this is from our lessons with Jackson and I. From here to here is how I do my phase out, right? Johnson & Johnson, we already know that. And then XLRE. Initial is going to be the 50. And Jackson, on this one's a little tougher. Where would be my ultimate on this? I could use the combination there of the 1 ATR channel that lines up nicely with the high of this range, or this, the 50 here is a little bit above. The 50 moving average is above the 50 RSI. I could also use this as my ultimate. But of course, Jackson knows this. If I use this as my ultimate, every time I get out of shares, it's going to be a higher percentage because it's closer. If I move it up to the 1 ATR channel, and I don't know why I can't move it there. Yeah, let's just call it there. And that is and then of course, Jackson, I'd have to measure from here to here. Doesn't really mean I think it's going to get up here. I just have to pick a profit target that makes sense from a technical standpoint to do my phasing out. But if we went up, rejected this 50, I'm out of the whole position. If we close above this 50 RSI and then reject this 50, I'm out of the position. And then if we actually do get there without any problems or red flags, I would be out of the trade. Does that help, Jackson? Okay. Jackson says, I can't praise this man enough for how his mentorship has helped me. It is worth every cent. I personally appreciate his method and patience. Highly recommend as a mentor. You will benefit. Oh, thanks, Jackson. Appreciate that, man. I try. I do put a lot of energy and work into those lessons because it's very important to me that my students succeed. Merritt says, the crazy thing is that it is inverse natural gas. I understand if... Oh, that's inverse. Okay, thanks for letting me know, Merritt. I understand if 3 times the natural gas, but why did they create 3-time inverse natural gas? I guess there is 2 times as well. You know why they do that, Merritt? Because people don't like to do their charts to the downside. They want to be short natural gas, but they want a chart that's going to the upside. Because they're probably more comfortable with the technicals to the upside. So that's why they have those inverses. Bing He says DGAZ is a mean reversion setup. Yeah, we just looked at that one, right? Well, it reverted to the mean. It is like that. Natural gas prices go down, DG goes up. Yes, that's correct. That's correct. So people want to have an upward sloping chart, but if the price goes up, they want to be short natural gas, but they base their prices on it going up. It's because if the prices go up, then the price of natural gas goes down. Bing He says, my thoughts on why gaps is risky because it also may gap down against me and bypass my stop. Yes, that's true. That's my reason why I didn't take the trade. I see. I'll tell you though, when I see a lot of gaps to the downside, and this isn't coming from me, this is from Interview and Market Wizards, but you know, when they are looking for the bottoms in stocks, they like to see 2-3 gaps to the downside. Let me give you an example of, I'm going to have to go way back here on gold. Sorry, I have to get a bigger perspective to make sure I'm in the right place here. Yeah. You know, when we had this huge leg down on gold, just horrible, horrible, horrible. What the Market Wizard guys are saying is that if you have a huge, big down move and then you have multiple gaps, you're getting close to a bottom. And that is exactly the bottom. Big gap here, big gap here. After a long, it's basically an exhaustion kind of situation. And that was literally the bottom. XLRE of +1 for ultimate. Yeah, +1. You are welcome. Murat, the correction was natural gas prices was my guess. Production was increasing. Stock was increasing. Consumption was Production was increasing, stock was increasing, consumption was increasing, but the price was increasing. But high media attention was the scary. Yeah. Whenever you hear about a commodity or stock over and over and over in the media, that makes me more scared as well. Okay. Let's see. Oh, hey. I have a chart to show you for Murat. This is Murat chart. I forgot all about it. This is another great example of a trade that Murat had. Long oil. Look at this. Bought down here. Added to his long here when we had some consolidation. Huge move up. Closed. And then closed. What a fantastic trade, Murat. Man, you are a master on those oil. Well, actually, I don't know if this is oil or not, but I know you trade oil a lot. Fantastic, buddy. All right, so slight down day today, mainly having to do with the overnight SPY trade. That was about it. So, these last few days, yesterday was profitable. A couple days before that, very small losses. So, this has been very choppy, not big moves up or down for me over the last 10 days, 2 weeks. And it's because the market's been so high. So, I'm kind of in a quiet period here. Not a lot of positions, no really big moves, big winners or gains, up, down, so forth. So, from a psychological standpoint, you want something to happen. You feel like you want to trade. You feel like you want to make it work, but you just have to do what the market. You just have to accept what the market's giving you. Like Steve Burns. I believe Steve Burns has been completely in cash for the last 3-4 days. Because he's waiting for a pullback as well. So I do have positions, but the ups and downs haven't moved too significantly. So the key is that I don't force anything. Try to make something happen. Eventually I will get into a winning streak or a losing streak. I hope it's a winning streak, right? But we just don't know. So, I do like the positions we have today. They all might dump on me tomorrow. I have no idea, but I can go to sleep and go on my walk and realize, these were good entries, right? Of course, we know the SPY entry. That's a given. VIX under 30 over 30, totally legitimate the way I trade. Dollar Tree. Great rejection to the downside, reversal, V1, under 30 over, all that kind of stuff. And XLRE, under 30 over 30, very similar. So Dollar Tree is some retail, XLRE is real estate. Real estate is kind of a slave to interest rates. So, TLT has moved up a little bit in the last couple days. And so, when bond prices go up, the yields go down. That's better for real estate. So that's probably why we're seeing this bounce here. Bing He says 3 types of gaps. The 3 types of gaps. The one you saying is exhaustion gaps. Yeah. Those were exhaustion gaps. That's correct. Jackson says, Mert, incredible on that trade. I agree. That's a freaking awesome trade. Mert says, crude oil. That's today's trade. Woohoo! Look at that. Look at that. You can see here on the RSI, though, under 30, over 30. So, I don't know if that's what Mert used for his trade, but if you're very simplified about it, it went from under 30, over 30, up to the 70. Dr. Long says, a lot of debt in natural gas. Market punishes leverage. You are correct, Doctor. Thanks for that. Jackson says, with J&J, a couple of days ago, it was above the 100 SMA and then closed under 100 SMA. Just curious, not a big deal for you on its own? Well, it's not great. It's not great, Jackson, but you remember my plan was if I got extended from 1 ATR that my stop was going to be a close under the previous day's low, right? That was my stop. That was my plan for the stop to the downside, not a loss of the 100. However, if we had gone up and rejected the 200-day moving average, I would have gotten out then. If we would have closed above the 200-day moving average, I would have kept it. If it would have closed below the 200, I would have gotten out, but not here in this area, not with the 100-day. I mean, as it turns out, that might have been like the best idea in the world, but to get out under, if it goes down tomorrow, losing the 200 would have made a lot of sense. But my plan was after it got extended, it closed below the previous day's low, and it just hasn't quite got there yet. Bing He says, I am stuck in my trades, not hitting my targets and not hitting my stop losses as well. Mixed feelings now. Yeah, I agree. That's kind of how it's been for me as well, Bing He. But these things happen, they happen. Don't get frustrated. Don't get down on yourself. Just trade the plan like you initially developed it, right? Don't try to force something. Murat, it lost the steam. I exited at the top price. what I did was to do very small 3 trades in Asia session. 2 of 3 created enough profit to put large sums at risk. In the end of the day, I would break even. Oh, I see. Okay. So you added some small, let's see, very small trades in Asia. 2 of 3 created enough profit. Okay, so 2 of your 3 small trades created enough profit so that when you took your larger positions, if they went against you, you'd break even. Is that what you're saying? I think that's what you're saying. Murat says, but as Greg said, the signals were all positive. I saw them once I took the trade. The momentum was very large. I took my first buy at one support line, another at another support line. Yeah, I mean, what I like here is that the under 30, over 30, but it did hold the support there. And then, here we have this big up bar. And do you see how Murat bought it when it came into about 50% of that bar? I don't know if that's your approach, but that's how I view it. And, how I view buying this, either here or here, kind of lines up with where he bought it. But I don't know exactly, what he did. But, it's kind of robust, showing that we would be looking at the same places to buy this, maybe even with different indicators. All right, everybody, I got to get out of here and go for a hike and get out in the sunshine. So Murat, thank you so much for coming by. Thank you for that, sharing this great trade with us. I appreciate it. Always really impressed with Murat's trade and his approach. Very, very good trader. So thank you, Murat, for coming. Banghi, thank you, sir. Hang in there. Don't get frustrated, all right? Don't get frustrated. We all go through this. Dr. Long, thank you for coming. Nice to see you. Thanks for your input there on natural gas. Hope you come back. Jackson, of course, thank you very much for coming. I hope that helped with those initial and ultimate profit targets. And Frank, thank you for coming. Thank you for letting us know about the Dean Foods. That's a great example for people to see about why it's so important to have your stop losses. But thank you. That was helpful. Jesse, thanks for coming by, bud. Good seeing you. Keep up to date with me on your trades. Jackson, you keep up on your trades as well. Claudia, really nice to have you here, ma'am. And hope that helps. But, spend some quiet time and think about what will help you become more patient and less impulsive in sticking with your plan, right? Smaller trading positions will help. Letting someone in your family or your friends know, and if they're nice enough to kind of observe your trades, that really will help. You will stick with your plan better when someone's looking over your shoulder. I can promise you that. Steve Burns, thank you very much, sir. And thanks for talking about the third ATR channel in your newsletter. I'm very excited to watch that tonight. But always great to have you here. Always an honor. Always a pleasure. Thanks, bud. Appreciate it. Mount Doji, good to see you. Keep in touch. Like to know how your trades are going, whether you took either of those trades today. Marco, good to see you, sir. If there's anything ever I can help you with, Marco, you just please let me know, okay? Kurt, good to see you. Hope you're doing well. If you have any trades, anything going on, please let me know. Kirk is a former student of mine, and like I said, I really like to follow my students trading. I really, it's it's important for me to see how they're doing and if they need help. Evan, very good to see you. Oh, I got out of spice at the end of the day yesterday. Oh, good. I forgot. I was looking at that today, and I forgot who had mentioned that they had SPCE, and we talked about it back here, that this looked like a little bit of a bearish bar because even though it was up from the previous day's close, it was the close was lower than the day's open, which looked a little bearish, and that turned out to be exactly right. So better to have taken it there, taken the profit yesterday, because I think you bought it here at 960, and today it was down quite a bit. So congratulations. And Toby Petty, good to see you. And I think I got everyone. If I missed, I apologize, but I think I got everyone. Thanks, Toby. Thanks, Jesse. Thanks, Merritt. Thanks, Greg. I must say that your ATR channels are helping me a lot on crude oil. It's very good to know about possible reversal locations. It's like a compass. Yeah, exactly, right? Good. I'm glad that's helpful. And Frank, you're welcome. Evan, you're welcome. Christopher Hitchin, hi, how you doing? I just joined after reading the recommendation from Steve Burns' newsletter. He is legendary. Yes, he is. Steve is the master. I mean, what he does with his posts on Twitter and his newsletter and his books, you know, have really made a huge impression on me. And it's always great to have Steve in here. Steve, thanks for coming today. He was in here earlier. And Christopher, thank you. I hope you keep coming back. I really do. So listen, go out, do something nice for somebody today. Have a good rest of your day. And hopefully we will see everybody tomorrow during the last hour of the market. All right. Take care now. Have a great day. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and Forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.